All right.
And just to make sure I'm good on time, Kristen, is the class today 30 minutes or an hour? Just to make sure
It's
I'm
it's 30 minutes, but it's okay if you go over.
okay. My slides end up being longer than I thought. At
Yeah.
first, I was like, this will be a short one. And then I got going and I was like,
Yeah.
okay. So,
Yeah.
um, well, thank you all so much for joining us today. Like Kristen mentioned, my name is Pam Broman. I am a branch manager and loan officer with Direct Mortgage Loans. I have been in the industry I'm going to shut this off here, for 24 years, and I've been with my company for 13 of those. I live, eat, sleep, and breathe all things mortgage and real estate related, and hope you get a lot out of today's class. So the topic that we're touching on today is avoiding contract fallout, how great agents, great lenders keep deals moving forward. And fallout has really been a bigger topic in the market in the last, I would say, gosh, what do you think, Kristen? six
Kirsten.
to eight months.
You're saying it,
Kirsten,
Kirsten.
sorry.
No worries.
Sorry. I'm so sorry. I
Yeah,
was just
I
talking
think
to a
you're right.
client,
Like
Kristen.
recently, things have been, I've seen just because I get to see everybody's transactions, when everything was so busy, things were not falling through because, buyers needed to get that house, But yeah, you're absolutely right. Things have been falling through a lot more lately.
Yeah, I feel like for me, I saw a big uptick in February and March of this year. And a lot of those buyers did end up purchasing, maybe they feel like they have more options. There's less pressure than there was during COVID where they had to stay in a deal. But either way, we are definitely seeing a lot of it. So I think this is a really timely class. So, all right, so we will dive right in. So why contracts fall apart? First, what I think is expectation setting. I think agents who do a thorough buyer's consultation have better results about keeping contracts together. Um, so that buyer's consultation, I think, is key to setting those expectations, and we'll take a bit of a deeper dive into that in the class. Miscommunication. I've seen times where the client thought one particular thing, or they didn't understand maybe mortgage terms from the lender, some type of miscommunication that in my mind kind of really shouldn't happen. I don't want that to be a buyer's experience with purchasing a home. Um, Buyer emotions. Buyers do get cold feet. I have a seller right now who actually got cold feet. And, he's such a nice person. The seller is really wanting to go out of his way for this buyer, but emotions are a big part of this industry. I think if we recognize that as industry professionals, we will do a better job of giving them that bedside manner that really it does take in this industry. I often see folks in our industry get frustrated with people's emotions. I'm like, this is the biggest transaction of their life. This is just part of it, right? So just understanding that I think is key to hopefully helping them with those emotions. Financing changes. So let's say that their credit scores have dropped or they lose access to a program because of something that changed within their profile. That can happen. However, we want to do a very thorough job up front so that we can avoid that, but that can be a part of it. Inspection misunderstandings. So the inspection part of the process is probably the number one reason we're seeing contract fallout right now. So they get into a house, the inspector comes back with 100 pages of items, and either they were under the expectation that they were going to get all of that fixed, or they misunderstood that, okay, if the inspector says that this HVAC is at the end of its life, that I should get it repaired or replaced, where a seller typically is not going to do that. So inspection misunderstandings is a big part of it. Appraisal concerns could be a part of that if appraisals come in low. So as you know, the appraised value is based off of 3 to 5 other home sales. If that property does underappraise, there are times when the contract, we aren't able to get it to the finish line. I will say, knock on wood, I have not seen that a big part of our sphere. We do have a local panel of appraisers that's doing a really good job. We are not typically seeing this being a major cause for fallout. However, it can happen. Cold feet, I think that falls into the same thing as buyer emotions. You know, they go to the house, they love it, they see it with the staging furniture, and then they get 2 weeks into it, the numbers start to really dive in and come to light, and they get nervous. Or lack of preparation. I sometimes, if I had a client towards the end of last year, I remember I was on vacation for the Christmas holiday with my family, and 2 days before closing, I had a client who stated she had prayed about the number for cash to close to go down and thought that it magically would. I was like, we've went over this so many times, but you'd be surprised what people, you know, they actually went and took out some of their own funds and used it on a cruise or whatever. They ended up getting it to the finish line and making it work, but making sure that they're well prepared. You never know what buyers will think out of their own terms that they're kind of creating. So just making sure that they're very well prepared in advance is a huge part of the process. All right, so now we're going to dive into the next graphic here. Oops, sorry, this thing moves a little faster than I'd like. So start with a strong buyer consultation. So identifying their needs versus their wants. You know, having that consultation where you're separating the must-haves from the nice-to-have when the search begins is huge. Having all buyers at that consultation is huge. I often see a lot of times, well, the husband wasn't there, and now he's decided that he doesn't want to purchase a property in that area or whatever it is. So just making sure that you have all parties really on the same page and you know what their needs and wants are, what's most important, and then the things that they'd also like to have but are not completely necessary, and you've communicated that thoroughly. I will share one thing that I'm really big on is recapping conversations with them in writing. So let's say I've gone over an approval with a borrower. I will then reconvene that in an email so that I make sure that they see what we've spoken about so I know we're on the same page. Kirsten, do you do that as well with your buyers for things like the buyer's consultation, like here's what I heard you say type of thing?
Oh, 100%. It's so important. I'm so glad you brought that up because it's actually saved me a few times when somebody really didn't understand and then they got that my email and were like, wait a minute, what? You know? Yes, so
Yeah,
important.
yeah, it's huge. I try to do that along the way in many different
Yeah,
conversations so that I'm like the buyer that was like thought that the cash to close would go down. I was like, well, here's our initial email. Here is our worksheet. Here is
right.
when you went under contract. Here is when you signed it. At the end of it, it was like, I felt like we had done everything we could to really
Right.
avoid the miscommunication because we've laid it out, you know?
Yeah.
So
Yeah.
I think that's really important. People
Yeah.
can't twist your words if it's in writing, right?
Yeah.
So,
And then they're
um,
hearing so much that's new to them, right? That it's easy to get confused and like not understand or, not ask a question when they didn't understand. And so it's so important to have stuff in writing.
yes, 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 yes. Discuss future plans. So another thing during the buyer's consultation that I also love to ask as a lender is how long do you intend to stay in the property and what life changes do you have ahead? A lot of our veterans that I work with may be PCSing, which means they could have an upcoming move in 5 years. I have a lot of clients who desire to keep the property as a rental, and I'm a landlord, so I try to talk to them about what that could look like. Just knowing really what that plan is, I think shows that you're trying to serve them on a different level because it's not just this transaction. You're trying to plan for the future alongside them. Understanding their budget comfort, confirming the payment they're actually comfortable with, not just pre-approved for. So when we as lenders complete a pre-approval, part of my process is that I do a screen share with them so that they can visualize the numbers. They also get to meet me in person, they get to see me, and we can go over those numbers. So we're going to talk about what their ceiling is, but then we're going to also hone in on their personal budget. And a lot of times I'm actually using a property as an example. I really want them to wrap their brain around the numbers that I'm providing versus what Zillow or Realtor.com is providing, which is probably not accurate. So making sure that they understand their budget up front is really going to save you time as an agent. I'm one of those lenders that wants to get them the numbers. I am not shying away from showing them the interest rate, showing them what it really takes to buy a house so that when you go look at a property, they are ready and prepared for that payment on that price point that you're showing them. I don't want you guys out there showing them an $800,000 home when they have a $600,000 budget. All right, so asking them what would make them walk away. I'll be honest with you, I meet with agents all the time. My husband is an agent, and I met with an agent a couple months ago, and I really liked what she said. And she said that she has some of the least amount of fallout. And what she does is when they're placing an offer is that she asks them, is there anything that they're uncertain of with this property? Are they sure they want to move forward? I was like, I really love that you're doing that. She doesn't have a nature that she's really pushing on them, that she's like, are we certain? Is there any concerns? Is there anything I can address? That way that 2 weeks down the line, if they have cold feet, you've probably talked about this, right? We already went through what that is. So I really, really could appreciate her approach. And I can see that that's what has served her well with having low fallout. Surface deal breakers early while they are still easy to solve. So I think if you get ahead of these things, again, they're going to be easier to solve than 2 to 3 weeks down the line when you're under contract and we don't have a way to get out of it. Again, clarifying long-term goals. Align the purchase with where the buyer wants to be in 5 to 10 years. A lot of buyers these days, I think, get a little frustrated with the market because they think that the first home is going to be a home that they live in long-term. It's probably not. So like my first home, gosh, I could never live there with my 3 kids now. It was a shoebox. I mean, I love that home. I still have it as a rental. It was a great first property, but it definitely wouldn't have been my forever home. So just reminding them of that. The first place is a stepping stone to get you to the next one, I think is really important. All right, so a good buyer's consultation. And I'm sure Kirsten has probably done trainings or we have trainings within KW on a strong buyer's consultation. So definitely, if you haven't sat in on one of those, I definitely recommend that.
Yep. And if you can't
All
make
right.
it when it's happening, the recording's in the coaching platform. So you could watch it right after this if you wanted to.
Right.
Yeah.
Yes. Yes. I'd actually like to sit in on one of those classes someday. I'd like to hear what agents go over. I probably have a good idea, but I'd like to hear it
Yeah,
myself.
I'll send you the info for the next one.
Okay, awesome. Thank you. So home inspection. As I mentioned, home inspections are the #1 reason why contracts are falling out these days. And I think setting the right expectation up front is huge. I had a client back in March, he was backing out due to mice. And I was like, oh, is it like heavily infested? And they were like, no, just, kind of normal. I was like, well, the world has mice. I was like, can we resolve this? I was like, he's going to buy a house. He's probably just going to buy the second or third one because he didn't have maybe the right expectation up front. And, sometimes some things just spook clients and there's only so much you can do, right? But I do think touching on the home inspection is huge. I think mentioning to them, this is going to be a lengthy report that you're going to get. Sometimes it can be over 100 pages, maybe more like 20 to 60, depending on the size of the property. But just saying to them, hey, I heard an agent say this the other day, and I thought this was great. When you get this report, it's going to be overwhelming. I'm going to call you to go through it, but just keep in mind that there is going to be a lot in there. And it's going to be overwhelming. Like letting them know that how they're going to feel up front, I think is, once you say that to them and then when they get it, they're like, oh, it wasn't that bad. I was expecting much worse. I think that's huge. Every home is going to have findings. No property is perfect. Findings are normal, not necessarily a red flag. We want them to focus on major components and safety, steering buyers to structure, systems and safety. Okay, is this a major component? Is it something that that is going to keep me safe? Not the small stuff. That keeping in mind that those things are common and not necessarily something that sellers are going to be willing to repair. Also prepare buyers before they read the report. Again, setting that tone that they open the PDF, having that conversation and calling and go over it with them. I love that agent said, I'm going to call you and we're going to go over this together. We're not hiding from it. We're going to have a long conversation about it, etc. Repairs or seller credits may be both options. So there is often more than one path to a resolution on an item that they want repaired. So for example, if the HVAC is not working, there could be a repair where they could replace it, or they could give you a seller concession. You always just want to make sure that the seller concession meets the loan parameters for that particular loan. If it doesn't, there's a lot of times a workaround. For example, we had one last week where there was, I can't remember what the repair was. I think it was something in the basement, but we had maximum seller credit, so we couldn't get any money from the seller. But what we did is we paid a contractor for this repair on the seller's side of the transaction, so they could still get it repaired after settlement without giving the money directly to our buyer. So that's huge. Another thing that I hear often is that you'll see in an inspection report where the contractor, or I'm sorry, the inspector will mention, oh, the HVAC is near the end of its life, but it's working. Where buyers want them to replace something that's working just because it's old. Most sellers are not going to fix an HVAC unit or whatever the case may be if it's just dated. They didn't fix it for themselves because it's still working. So essentially, they're probably not going to replace it for the buyer either. So I think, again, having that conversation up front will hopefully avoid those issues down the road.
Let me
What sellers will typically...
at a class last week or 2 weeks ago, we had a home warranty person, and that's an option when something's like that. Like if you have an older HVAC, it's working fine, but it's older, that would be a terrific thing either for the buyer to pay for or to ask the seller to pay for. They may be willing to spend, a few $100 on a home warranty when they're not going to replace a whole HVAC, and maybe that'll get the transaction, to the finish line.
Yeah, definitely. The home warranty is great. So that's something that I, as the lender, sometimes will chip in with the buyer, like to help save a deal and make them feel more comfortable. I remember my first house, I had one. It was a great insurance policy, basically. It makes them feel secure that it's not all on their shoulders if something does break. Yeah. What sellers will typically repair? So typically address structural issues, roof or HVAC failures, safety concerns. So if there's a broken step, they know that not only for the loan will that need to be replaced, but also for your buyer to be safe. Major plumbing or electrical. The things that they will not typically include would be cosmetic imperfections. So if they don't simply like the look of something, that's most likely not going to be repaired. Older items that are still functioning. I think that's probably one of the biggest ones that we could avoid, is letting them know up front, hey, if something is old but it's still working, the seller's not going to replace that. Then a week later, when we get that inspection report, it's like, we talked about this, this is not something they're going to replace. Setting this expectation up front keeps small findings from derailing a strong deal. Appraisal expectations. So appraisals are one professional opinion. So the one thing that I will say is, like, we had one last week. It was this incredible property in Howard County, but a very unique home. The property did come in slightly under our purchase price. However, it did not affect our numbers. The borrower happened to be putting down so much. And I said to the buyer, I was like, this property is so unique. That's just one professional's opinion. That's just that appraiser's opinion. I love this house. I think it's probably is at what you're buying for it and above. But, he also saw that. Then an appraisal, there is an opinion there. So it's not necessarily, 6 months from now, that number will be different, essentially. So, so comparable sales vary. So another aspect of an appraisal is that the appraiser gets to choose which comparable sales they're using. So for example, if they use a short sale where the property was banged up and it really went through a lot to get it to sell, versus if they use all comps that were standard resales, that could affect your value. Different comps can lead different appraisers to different values. So if a property does come in low, we're going to try to work through it, but giving your buyer this type of feedback up front, kind of setting the expectation for how appraisals are completed and how they're compiled, I think is a good thing to point out as well. What happens when a property under appraises? So technically, if a property comes in low, You go back to the negotiating table with the seller. The seller could come down on the value, they could meet you in the middle, or you as the buyer could cover the difference. So technically you go back to renegotiating. A low number is a conversation starter, not indefinitely a dead deal. I'll be honest, I'm the type of lender where if we come into some hurdle with the appraisal, sometimes it's the agents, everyone chipping in to make a deal work. It's very rare that appraisals are really causing us to lose deals. We're really trying to find a way to work through them if we can, and for the most part, we've been successful there. Solutions often save deals. Seller reductions, buyer contributions, or shared solutions frequently bridge the gap. So again, we had one that came in 10,000 light. It was a PA deal with a KW agent up there. The buyer's agent, the seller's agent, I as a lender, the buyer and the seller, all of us chipped in to cover the 10,000 and got that to the finish line. So I like that team mindset of like, we are not going to kill a deal over this appraisal. So hopefully we can work through those. Step 4, appraisal continues until settlement. The loan is not at the final offering stage. It is monitored all the way. So just one thing that you want to also set the expectation for at your buyer's consultation is that the mortgage process does not end until the day of settlement. When they're pre-approved, they are essentially just that. Started off with a pre-approval, not a final approval. So mentioning to your buyer at that consultation, hey, if you're going to change jobs, if you're going to spend some of your savings, if you're going to apply for new credit, if you're going to co-sign for a loan, talk to your lender. I always say that we as lenders are basically like attorneys going to a judge to get them a loan. So we want them to share with us the good, the bad, the ugly, like tell us everything so that we can walk you through it. My client that I was mentioning that spent their money on a cruise. It wasn't a big deal it was kind of a big deal that they spent the money on the cruise, but we've had to do some finagling. Ultimately, we dove into it. It was nothing they could hide, but if they had just told me up front, it would have been a lot easier than all the rigmarole we had to go through. So I encourage them to really share everything with us, not to hold back. We are on their side and we want to get them to the finish line. So again, tell us everything. Avoid changing credit, employment, or income or assets. So again, just to touch on this, any major financial change mid-process can put the loan at risk. So for example, we have a client who had $30,000 in savings. If she were to spend that savings, we would lose her approval. Even though we didn't need the $30,000 for the loan, it is what helped her get approved. So if she went and spent it on furniture or whatnot, we would not be able to get to the finish line. So just making sure that they're aware of that. Again, calling the loan officer before any big purchases, job changes. A quick call to us can make sure that they get to the finish line. We've had times where I'm like, hey, you're fine to change jobs, but let's just do it the day after settlement. Or hey, if you're doing it before settlement, let's do it early on. Like there's going to be a strategy for all of that. So just reaching out to us to make sure we walk them through it is key. Communication prevents problems. Encourage buyers to over-communicate. I'm a big believer on the lending process to over-communicate with everyone involved. We want the buyers, the agents, and everyone else to do the same. Early conversations create solutions. The sooner a concern surfaces, the more options we will have to solve it. Your lender always wants them to succeed. A good lender is a resource, not an obstacle. Buyers should treat it that way. So again, tell me everything. Tell me, again, the good, the bad, all of it. Tell me over communication. Before the signature, reminding them that the contract is legally binding. I have a lot of buyers that I've seen in the past 6 to 8 months where they're like, yep, I'm out. I'm like, well, maybe not so easily. I think some don't recognize at times that this is a legally binding contract and that it should be taken as serious as it is. Ask about concerns before signing. Once signed, options will narrow, questions belong before the pen touches the paper. Discuss long-term fit, revisit whether the home still matches the buyer's big picture plans. I've seen a lot of buyers who, they were purchasing a property an hour and a half away from work, and then suddenly they were like, yeah, I don't know about that commute. I was like, sometimes, their feelings about things just change, but if you can really discuss whether it's a long-term fit up front, I think you can avoid that. Confirm the payment being comfortable. Another thing that I am huge on as a lender is making sure that I get them the accurate payment. I am pulling the accurate tax bill. I'm pulling the exact condo fees. We want them to know exactly what the property will entail. We don't want them going off of Zillow or Realtor.com's monthly estimate. We want it tailored to their financing so that there's no questions. 3 weeks into it, if they get cold feet, it's not for something that we didn't address or go over with them. Addressing hesitations early. Any doubt deserves a direct conversation, not avoidance. And I think, again, this is where that recap in an email is huge. It's like, hey, we spoke about your concern about this being a longer commute. Your solution was to reach out to your employer and see if you could do flex timing, or, addressing these things and not hiding from them, I think will keep deals together as well. The human side of the deal, preparing buyers emotionally. Normalize buyer's remorse. The one thing that I will say after 24 years in this industry is that I can emphasize with clients feeling overwhelmed by purchasing. I often say to them, when the last house that I bought with my husband that we live in, he's like popping champagne and I'm gagging in the corner. Like, I understand their anxiety. I really, really do. It's a big purchase. And, I want to address those concerns and find a way to hopefully put their mind at ease. And I share with them my own anxiety, that I suffer from, that has been a part of my home buyer journey, and how I've gotten comfortable with purchasing, but because I do truly understand. Second guessing is a big decision. A big decision is common. Buyers should know that going in. So feeling 2 to 3 weeks down the line, questioning the purchase, if you address that and emphasize with them, I think that, you're going to have someone that's more likely to send you referrals because they felt like you truly cared about not only the transaction, but them as a person. Buying is emotional. This is one of the biggest financial decisions of their life. Feelings are a part of the process. I think that rings true both for buyers and so true for sellers. I know when I saw my parents' home being sold, I didn't think I had an emotional attachment to this tiny little home in upstate New York until it was getting sold. And I was like, wow, I see what sellers go through. It really is emotional. You'll often hear experienced agents say that they're therapists. I think that is very true. You guys wear so many hats, and that is a big part of it. Keeping the buyer's focus on facts over fear. When anxiety rises, ground the conversation back in real numbers and real terms. So really keeping it, focused on the facts, not letting that anxiety creep in too much is something that is really just a part of our job. So handling those emotions head on is huge. Keeping everyone communicating. So I think of the agent, sort of the orchestrator amongst all of these different parties, along with us as the lender, making sure that everyone is communicating accordingly. Agent, loan officer, title, buyer, seller, inspector, and appraiser. Every stakeholder in the transaction is a communication link. A breakdown anywhere in the chain can put the closing at risk. So if we're running into something on a file, we as the lender want to make sure we're sharing it with all parties. So we had a hurdle on a survey issue. So just letting know all parties, hey, this is what we're doing. We're working on every single step of the way. I heard an agent at the Keller Williams in Columbia office say, he's an older gentleman, has been doing it a long time, that communication in our industry is like money. You can never have too much. If you over communicate to a buyer at the end of that transaction, I can tell you, you're more likely to get referrals. They will feel well taken care of, and no one is ever going to complain about you communicating too much. So I think that rings so true. Choose the right loan program. Also, another thing that I would say that helps keep contracts together is making sure that the lender has gone over all options that the client has available to them, including down payment assistance and grant programs. I often see some lenders who will make assumptions based on maybe the client's savings and not offer them a particular program. Let's say, for example, my client has $50,000 in savings. I've seen some lenders shy away from offering a down payment or grant program because they think they don't need it. I always want to offer them every option. They may be planning a wedding, they may be having a baby, they may, you never know where some of their funds may go. So reviewing all options and letting them really make an informed decision, I think, is important. Comparing loan programs against the buyer's specific situation is not a one size fits all default. Discussing down payment assistance programs, many buyers qualify for programs they don't know exist and they may not necessarily need, but they still may want it. Consider seller credits. Credits can offset rate or closing costs when the numbers are tight. So the way that we are compiling the contract can be key to keeping it together, especially for cash-strapped borrowers where a seller concession can help them stay in the game versus them having to cover all the costs themselves. Matching the financing to the buyer's goals. So the right program where the buyer is headed, not just where they are today, is key. So for example, the down payment assistance programs often do not let the buyers rent the properties out without refinancing out of it. If they plan to turn the property into a rental property in 3 years, they may not be able to refinance out of it. Therefore, that could block them from those future goals. So again, asking the right questions and really getting to know your buyer on that level is important. The playbook. So educating buyers up front, setting the expectations, communicating frequently, and partner with experienced professionals. I think if you have these 4 key factors, it will allow you to be proactive, not reactive during your transaction. Key takeaways. Again, we want to have a strong buyer's consultation up front, set the right expectations for the home inspection, educate them on the appraisal, and again, that it is one professional's opinion. Have them prepared for that mortgage financing is going to continue throughout the process through settlement, that you're going to continue to communicate through the process, and keeping the team as a close-knit as together as possible, communicating along the way as much as you can through all parties, I think is important. That is the end of the slides. I know I went a few minutes over, but I would love to answer any questions that you may have.
No one has a question?
I have one.
Oh,
Yeah,
you
I'll
did.
just join.
Thank you.
Hey Pam, just a quick question. Like when you do
Right.
a pre-approval, right? Is it common then that for example, the buyer's agent would then say, "Hey, can you give me a proof?" Okay, say they're approved for 500,000, but then you're only going to put in for 480. Would you then say, "Hey, can you write a pre-approval for 480?" And then I'll phone you later and be like, "Actually, can you change it to this? Can you change, is that normal? Or do you normally just give a whole bunch and just kind of go by the fly, if you know what I mean? I mean, till the limit, of course."
Sure. So I tend to take the agent's lead on what they prefer, but I generally speaking like to tailor it to the property and the offer price. If I need to change it 5 times, it takes 5 seconds, honestly. That for me is no big deal. So if you negotiate from 550 to 540 to 530 or whatever, that's fine. But what I like to do is prepare the pre-approval letter for the property so that that listing agent knows, A, that lender's on the ball. They've looked at the property, they've pulled the tax bill, they know that it's a condo, they know that we're really making sure that not only do they qualify from the buyer's perspective, but also the property. I think any listing agent that sees the letter is tailored to the property is like, okay, this tells me that the lender's on the ball, they've really looked into the property, then I call behind it. Like, again, we're trying to sell ourselves to that seller's agent, and having a good pre-approval letter tailored to the property, I think, is part of that. Do the others work? It's not like it can't work. I just would like to give that level of service where it is tailored to the offer and the property.
Yeah, great
Yeah,
question.
I have a question.
that
So
is a
would that
really good
work
question.
for like vice versa? Like let's say if they wanted a property that was a little more than their budget, but they really wanted to go with it, can you then rewrite it tailored to that?
Yes, as long as we have a way to make that work. So for example, if they're approved for 450 and they want to offer 470, we would need to find a way to cover the $20,000 difference. So we would have a conversation like, okay, this is above your pre-approval, but do you have the ability to cover this difference? We just have to have a way to get there, if that makes sense.
Okay, I see. Okay.
Yep. And ultimately, probably the way to get there is that they're covering the difference. So I would put in the pre-approval letter the down payment, which is probably is a stronger aspect to that I want to show and sell to that listing agent too. So it's like, okay, if they're going up above their qualifying, they're probably putting a larger down payment than's required, and that's a strong aspect on a loan that we want to showcase.
So is that typically what happens? Like if that was to happen, would it then be they have to put a down bigger deposit?
Um, Technically a bigger down payment, not necessarily a
Oh,
bigger
I'm sorry, yeah, down
deposit.
payment,
Like,
right.
yes, but essentially, yes, typically speaking. Now, one thing that I will mention, because you bring up a good topic, we as lenders always give a pre-approval based on a number. For example, 450. We are technically approving them to a payment. So let's say they find a property at 470, but the taxes happen to be really low because it's in Carroll County, for example, that has pretty low tax base. That number that we're giving for a pre-approval is really more of a vague number than we often express. So they may be able to go to 470 if the taxes are on the low end. And on the flip side, let's say they're purchasing a property at 450, but it has an $800 a month condo fee. Well, technically their approval would actually have to go down to accommodate the money for that condo fee. So again, we are approving them really to a payment versus a purchase price. We just tend to give you that purchase price because that's easier for people to kind of wrap their brain around when they're looking at properties online.
Okay, I
Does
understand.
that make sense how I explain that?
Yeah, that makes sense. Thank you.
Sure. Thank you.
All the more reason to be in a lot of communication with your lender partner so that, you're not writing an offer on a house that, your client actually can't afford. We want to be in communication before you write that offer.
Definitely. Yeah. There's nothing that is like, oh, when I see like an agent spent their Saturday afternoon and then they send me a condo and I'm like, oh, we don't qualify for this one. It's not a bad idea to check with the lender before you guys take them out to look at properties. Like, hey, Pam, just want to know that these will work up front. I think that your lender partners, a part of our service to you is to save you time. So yeah, takes us 15 minutes to potentially save you, what, 3 hours of showings.
Yeah, I've seen that happen with the HOA or condo fees specifically. If you're in an area where those just happen to be really high, that mean, just take that into account. That's going to affect the payment a lot.
Yes, yes, definitely.
All right, any final questions? All right, well, I have Pam's contact info in the chat if you want to reach out to her. I'll also post it, I'll put it with the recording when we upload it. And thanks so much for helping us today, Pam.
Yeah, absolutely. Thank you guys. Reach out anytime that I can be of help, even if it's not a file that would cross my desk. Any ways I can help you is a win for me. So thanks for having me.
All right, bye everybody. See you at 12 o'clock for the six-figure blueprint. Bye, y'all.